Good morning, everyone. Thank you so much for joining us. Welcome to our second day of Bloomberg Invest, where we unite leaders in asset management, banking, wealth, and private markets for conversations on the most compelling risks and opportunities across asset classes, across geographies, across economies. I'm really excited to be hosting our innovation stage. I hope you've had some coffee. If not, please go help yourself, because our plan is to build on that caffeine jolt and awaken your minds this morning to the transformations taking place in tech across finance. Today, we're gonna focus on a couple of things. We're gonna focus on how AI is being applied across the big banks and who is outpacing who when it comes to adoption. And for more on all of this, we're gonna bring you some of the experts and the leaders. We're gonna hear from executives at Evident, at JPMorgan Chase, and at PNC, and Bloomberg's very own product lead. First off, I wanna say big thank you to our sponsor, Invesco QQQ. They are supporting our innovation stage programming this year, so big round of applause. And I have a couple of housekeeping issues to just go through. If you want to connect to Wi-Fi, if you haven't already, all the info you need is on the badge that you were given when you came in and on the screens here as well. And we'll be flashing a QR code throughout the day for you to participate in polls and also submit your questions to our speakers. There it is on the big screen. We'll do our best to get to it. So if you could take out your phones now and scan this code, you'll be toggling back and forth between Q&A and polling throughout the day. We'll save the polls for later, but we do want to try to work in some of the questions that you do pose to our speakers, and we'll try to incorporate that. So please go ahead and scan that right now to pose your most pressing questions on this Wednesday morning. Now, be sure to follow today's coverage and engage in all the conversations across the major social media platforms. Our hashtag is Bloomberg Invest. Our handle is @BloombergLive on Twitter, also known as X. I still can't say that without tripping up. LinkedIn and Instagram. And if you have a Bloomberg terminal, look for today's conversations using the function Live Go. We also have an event app. You can use the QR code on your screens to download the Bizabow app, and you can access our virtual networking community. You can chat with other attendees and build your agenda for the day and much more. Turn on your push notifications as well to get reminders for the event through the day. Now, I hope you're as excited and caffeinated as I am to get started. Are we all good? Okay, great. Let's set the scene first with Evident. Evident is an intelligence platform that benchmarks and tracks AI adoption across the financial services sector. Evident's AI index measures the overall AI maturity of the largest banks around the world. So for more, let's please join me in welcoming Alexandra Mousav, co-founder and CEO of Evident.
Thank you so much for the introduction. Hello, everyone. I'm Alexandra Mousav, the co-founder and CEO of Evident. I'm going to get us straight into what we do. We are a intelligence platform that are actually the first to publicly rank banks on their AI maturity and their AI capabilities. This is an index that we produced for the first time in January last year, and we did a second iteration that we released in November last year. So it's actually only, 16 months old, but definitely was released not by design, but more that we'd been looking at this for many years, actually at a national level. We were the team that built the first global AI index back in 2018, looking at the ranking of nations on the strength of their AI ecosystems. So we've been deep in the engine room and looking at what are the components that go into AI ecosystems in terms of AI development and deployment. And when there was a growing interest and demand from businesses and banks in particular to look at how they compare in terms of the spend and AI efficacy, where is the investment going, what is the strength of their AI ecosystems, we started to build this, which, as I said, released it in January last year. So what does the ranking tell us? So first of all, this is now on an annual cadence, but we map this data on a high-frequency, real-time actually basis throughout the year, so we can see and we can track all of the developments, the AI activities in the banks, who are they hiring, from where are they hiring, what are the innovation levers that they're pulling, and so on. And then we release this once a year. The next iteration of the index is going to be released in October. So we base this on millions of data points that funnel into 100 indicators per bank that funnel into these 4 core pillars that make up the ecosystem of AI maturity. So we look at talent, we look at innovation, we look at leadership and operating model, but we also look at the transparency of responsible AI. I'm going to double click on that in a minute. But just before I get into a bit more of the weeds of the index, how we do it and what we're seeing, one of the things that were interesting to note when we saw the results for the first time, and in the second iteration as well, is that the North American banks very much dominate the top end of the index. We cover the 50 largest banks in North America and Europe, and a few banks out in APAC. And what we saw here is that the North American banks take the 12 top spots in the top 25 of the rankings. North American banks, a mix of US and Canadian banks. You can see JP Morgan is in the lead here, followed by Capital One and the Royal Bank of Canada, followed by Wells Fargo and UBS, Combank, Goldman Sachs, ING, Citigroup, and DBS. Some of these are very big banks, some are small. We make this index so it is in proportion of the size of the bank. So we also, in fact, look at that intensity of the investment and how it relates to the size of the bank. So I'll get into a bit more detail on that in a minute. But it was interesting to see these North American banks leading in this index, and the European banks slightly further behind, apart from a few of the big European banks, UBS and ING. And one of the reasons, when we look back over the last couple of years, sort of why that's the case, the common denominator of the leading North American banks, the leading banks in the index, is that most of them were really early out the gate, making it really clear that AI was top priority and that it was a focus for the bank strategy. A lot of the US banks would be very clear about turning the bank into an AI business rather than a bank first. And the European banks would typically articulate it as in, we're a bank and we're going to use technology to make us a better bank. So with that cascaded a lot of decisions around establishing research labs, which was very much the case for most in the top 10 here, and establishing these research labs back in 2018, 2019, with the view to infusing the bank with the sort of mindset of this is different, AI is different, and it needs really specific research that can be scaled across the bank. So getting into areas that are in neural networks, deep learning, unsupervised machine learning, synthetic data, and so on, where the research is needed in order to be able to see where it can and how it can be applied, and then how that can be scaled across the bank. So that was one of the things that we saw, but then also organizing and reorganizing the bank and the operating model to really become as nimble as possible to identify the use cases, identify the need of the data infrastructure, the data strategy, and really focusing on getting that time to production down. So looking at reorganizing that operating model. And then doubling down on those innovation levers that the banks are pulling, whether it be on that research, as I mentioned, or on patents, whether it is in investments, in ventures and acquisitions, where you can onboard the capabilities of startups or other firms, and also partnering with various big tech partners. So that was something that the leading banks really started at 5, 6, 7 years ago, with a focus on being sort of very AI specific in that strategy on these levers. And then with that, as we all know, there's a war on talent, and that is only intensifying. And I'll get to some of the data that we pull on a daily basis on who's hiring what and how that's changing, especially in this last year. But that capability of attracting and retaining talent really started some 5-6 years ago, with making it very clear that it is a very good place to be an AI expert. So if your bank is in and everyone is in this war for talent, does the AI talent have a good place to be in this bank? Does it allow you to publish research, attend conferences, work on patents? Is there IC track? Is there training and skills development that can constantly keep that AI talent moving in its capabilities? So that's something that the leading banks make very clear, that it's open to all of this, also open to activity on open source platforms like GitHub and others, where AI talent can show their wares. And that is quite important to keep going on in order to attract that talent. I will, this is I don't know if you can see the detail on this, but this is just to double click on the pillars. The blue pillars here is what is in the index, the public facing index now. So again, talent is what weighs the most, with 45%, where we look at the entire talent stack of the bank and what is it made up of. So we look at AI development capability, model risk and implementation capability, look at 250 odd role titles within that to really look at what does the bank have in-house of AI capabilities, and looking at what does a leading bank look like versus maybe the ones that are, in the middle, fast followers or further behind. What are the characteristics of that talent? And innovation, as I said, the levers that are pulled there, research, patents, ventures, partnerships, weighs 30%. So the chunk of the sort of lion's share of the index is really based on the sort of engine room, as we would call it. And then leadership, looking at the narrative of the bank, being very clear. We look very carefully at what the banks are saying in terms of strategy, spend, use cases in production, and the ROI. And then transparency of responsible AI is something that is very nascent in terms of reporting, and is only measured here with 10% in the index. The orange pillar is where we go behind the scenes. It's instead of an outside in, it's an inside out on outcomes. And we look at them, we map banks on the outcomes through the lens of how many use cases in production, how many in the pipeline, where do they sit in the bank, what is the ROI, what is the time to production, and what are all of the enablers and hurdles in getting use cases from ideation to production. Seeing a lot of really interesting trends out of this last pillar, this outcomes pillar, in terms of banks, what they're spending, what the trajectory of spending is, what proportion of the spending is on AI versus overall tech spend, generative AI or Gen AI use cases going into production now, but are very much internally facing, not externally facing, and looking at that distinction between Gen AI use cases going into specific use cases in business lines versus being across the organization. A lot of conversation around what's the best setup and operating model for this, whether it's having an inventory and a centralized system to prioritize the use cases, and how much of that decision-making sits in the line of business. So central versus federated is a big debate, and of course build versus buy, and all of that comes up in that. We get the question of like, when does this start to hit the bottom line? This is a quick sweep of just looking at how are the top 5 banks performing in the index versus their stock price performance. Very noisy metric, but this is starting to become a much, much tighter correlation between AI maturity and the AI capabilities being built, and also looking at the outcomes and how that's hitting the bottom line. This is something that we are following very closely, of course. We assume that this, the correlation is only going to get tighter and tighter as we go through the year, but particularly next year, where you're going to see a lot of the use cases that are in the pipeline across all the banks really getting into production, and into production leading to efficiency gains that are going to hit the bottom line in terms of cost reductions, but also on revenue uplift. So just an example here, when you double click on the ranking itself and look at the scores, and so this is something we track, of course, like everything else, very closely. But as you can see, the 3 leading banks are really far ahead, and JP Morgan in particular in terms of AI capabilities. And then it's followed by sort of 2 or 3 clusters behind that are really far behind, that are, I would call them the fast followers, and then the middle of the pack that are sort of just in the beginnings of really thinking about what is our AI strategy and our data strategy, and how are we going to, build by, are we going to wait for costs coming down and reliability of the models to improve, and then have this second mover advantage. So that's sort of the thinking of that second cluster, and then the cluster in sort of the back of this range are banks that are sort of really at a nascent stage. But what is interesting to see for us is that tracking this from the January iteration to the November and to the data that we're following, we're just seeing this gap between the leading banks and the lagging banks increase. So the leaders are pulling ahead really, really quickly, and those that are not, that gap between them and the leaders is really starting to grow and grow at pace. So that, of course, raises the question of, is there a point in time where it's too late to jump in on the AI agenda and AI strategy and implementing that, because the banks in the lead are so far ahead and it's going to be difficult to catch up. So we see this bifurcation happening sort of across the index, so looking across North America and Europe and some of the banks in Asia. But when you double click on that just, for example, in the US banks, we're seeing that bifurcation happen here, but also in Europe, and also specifically on the UK banks, the ones that are leading and the ones that are falling behind. So that bifurcation is again, will be seen when we're sort of starting to track how it hits the bottom line, and the share prices, and also the reporting on the return on investment, which more and more banks are starting to report on. Just a quick sweep of our latest data on talent, looking at the 10 banks in the lead on AI, on sort of total AI talent capability lead. So here we see that the banks that were leading in the talent pillar in the last index are still leading when we're looking at the new data coming in on talent. The leading banks are adding more. We're seeing a lot actually being pulled from, a lot of new talent being pulled from academia by the leading banks, more so than the banks lower down in the index. And we're seeing that at a pace of more than 50%. So bringing in new talent, very much pulled from academia, with specific skill sets, specific technical skill sets that have been identified by the banks that is needed. But it's not only there that talent is being pulled from, also pulled from other banks, from big tech, and so on. And we do see that some European banks are starting to pick up pace on this. So looking at some that are really shifting gears here on hiring talent. One to maybe flag before I end, with only a few more minutes left, is that we of course also track one very important lever that the banks are pulling, which is on AI research. And just to give you a sense sort of the scale of this, with JP Morgan in the lead with very strong AI research output, which is actually 45% of the total of all research being released by the banks. But followed by, and here again, the US banks are very much the lead, or the North American ones, with RBC, TD, Capital One. But Wells Fargo is seeing a sort of an uptick in the latest data here on research as well, sort of doubling down on sort of that particular lever that is available for banks to pull when it comes to AI capabilities. And the same what we're seeing on patents. Here we have Capital One and Bank of America in the lead on patents. And that's not tapering off. That's only these banks are doubling down on that. And interesting to note that Truist Bank, who didn't publish a lot of patents, have just recently been flagged up with 55 new patents filed, specifically related to the bank's new virtual assistant. So that's sort of what we can read out of the data in terms of sort of what's being built, and of course triangulate that with the talent that gets pulled in, and all the other aspects of the ecosystem. Ventures is the last one. Very quickly, this is another important lever that the banks are pulling increasingly in terms of building the capabilities of the bank of accelerating this AI implementation. Here we have Citigroup and Morgan Stanley in the lead and when it comes to AI venture activity, but we see more and more European banks show up here. So with that, I'm very happy to take any questions after the sessions. It's a lot to chew through, a lot of data here. If anyone wants anything specific, I'm very happy to share that. And with that, thank you very much. And I'll hand back to our hosts. Thank you.
Please welcome to the stage Deb Lindway, Executive Vice President and Head of AI at PNC, and Derek Waldron, Chief Analytics Officer at JP Morgan Chase with Bloomberg's Scarlet Fu.
Thank you so much for staying with us, and I'm really thrilled to be continuing the conversation, building on what Alexandra just told us. I heard a couple of phrases that she mentioned a few times. In production, use cases, efficiencies. There's a lot of hype, there's a lot of fear around AI. According to Citigroup, AI is likely to displace more jobs across the banking sector and industry, really, than any other sector. 54% of jobs across banking have a high potential to be automated, according to Citi. Do you agree with that? Does that sound about right, Derek and Deb?
I do think there's a potential to have a high percentage of jobs automated, but I also think there's a great potential to bring a lot more efficiency to jobs, you know, when we think about some of our early use cases. So I do think there's a lot of potential with what we're doing with both AI, traditional AI, as well as generative AI.
So I think that the assertion that there's a lot of opportunity in banking is probably correct. If you look at our bank at JP Morgan, we are most focused on the domains of technology, customer service, and operations as having the most transformative impact of Gen AI, and that would be roughly maybe half the bank or something by head count. That said, I always say that I think it's very difficult to actually try and put projections out as to what the future state will mean. And the reason is because banking has a long history of other very disruptive technologies, the mainframe computer, the ATM, online banking. Back then, many predictions were made around what the future could look like. And while people 25 years ago thought that the bank and bankers could be questioned, in reality, we have more banks now than we did 25 years ago. More branches.
Yeah, there's a Chase branch on every corner of Manhattan, it feels like. So to that end, the ATM has not displaced people. Let's build on what Alexandra said and to learn where and how specifically your firms, which, as she showed us, are both included in that Evident AI Index, are applying AI across your many, many businesses, consumer banking, consumer finance, commercial banking, capital markets as well. Derek, let's start with you because you represent JP Morgan Chase, and as Alexandra was showing us, it's far and away the leader here in terms of building this AI presence. Can you share specific examples of current use cases for how AI and Gen AI is currently being deployed at Chase, at JP Morgan Chase?
Yeah. So we went live with our first generative AI use cases at the beginning of the year in 2024. We started work on them at the beginning of 2023, and at that point we were learning around the technology, putting in place the necessary governance, risk and control frameworks, et cetera, and that allowed us to go live at the beginning of the year. The first foray into generative AI use cases were quite basic. They were focused on just using an out-of-the-box model as is. That had very helpful utility for applications like summarizing articles, summarizing research, providing first drafts of documents or content, etc. But much more power began to get unlocked when we were able to connect generative AI models with our own internal data. And that then unlocks the field of very much more sophisticated knowledge management systems. So if you think in a bank, there's lots and lots of different job families. where it's needed to get quickly access to information and answers. And generative AI provides a very helpful interface to provide very precise answers based on that. And as we look forward, we're looking to tap into more and more connectivity of this technology into our systems.
Deb?
Yeah, I would say similarly in terms of the focus on pretty common use cases around knowledge search assist. At PNC, we've taken a very deliberate approach, and we have our use cases are still in the pre-production state for generative AI. And we are also looking at assisting those frontline employees, could be call center agents, branch employees, where they've got thousands of documents, that they may need to look through for information to provide to customers and clients. So that is one approach. It's also being used internally as a tool we're looking at, again, in pre-production, to assist our technology and our developers. So when you look at generating code for a new product, new capability, new solution, how do we leverage generative AI to help kind of with, if you will, a first draft of what that code may look like for our developers to be more productive?
You both mentioned some phrases that I want to ask your clarification on. What does pre-production mean versus in production?
For us, pre-production means, so we look at doing, and sometimes it's in an innovation lab environment, doing a proof of concept. So understanding with the data, because having good quality, accurate data sets is incredibly important, often very, very large data that we need to work with. So we experiment with that, sometimes in a lab environment, proof of concept, and then we start to move into pilot phase. So not fully in a production environment yet, but getting feedback from our users as far as, is this accurate, is it working, before we're ready to go through all of the approvals, checks, et cetera, to make sure we're ready to move into production and actually have a broader set of employees using it. But all of ours right now are non-customer facing. We're focused on bringing efficiency gains to our employees.
At what point will it become customer facing, do you think, Derek?
I think it will take some time. We also do not have customer-facing use cases at the moment. All of the use cases are internal-facing. I think there's a natural sequence. First of all, you would expose it internally, and then once you get comfortable with it, it demonstrates its value, and you're comfortable, then you could turn that outwards. But at that point, the risk profile does step up quite a bit. There's been some very interesting news anecdotes around from other companies who have gone live with Gen AI-based chatbots. And there's been misspecified pricing, misspecified terms that have even turned into lawsuits. And the legal precedent that's being set is very, very clear, which is that a customer-facing AI channel is an extension of the company. They are accountable for what an AI system sends. And therefore, I think we'd want to be very careful before we would go live with those.
So that's really interesting you bring that up. I'm curious to hear where you think it's not possible to use AI or Gen AI across your bank right now. Are there any parts of the operations that are still in your mind, AI proof until there's more data to work with, there's more real life examples to work with?
So I think that let's take a look at where the technology is now and where it's going. As it is today, there's a lot of domains that are still sort of AI proof. And even take a look at the legal domain. Lawyers today are trained with years and years of domain expert experience, and the best of large language models struggle with the high confidence to get those exactly right. But I think we would expect that gap to close in the near to medium term. These models will only get better. And so if you take, I think your question is more directed over the longer term, what types of jobs are going to be secure. And it's a little bit speculative, but a few things that I'd point to. One is that customer relationships are always going to be high value and irreplaceable. I think finance is always going to have a very big element of human trust, and so relationships are going to be very important. And as well as AI systems get more and more and more sophisticated, they'll be extremely good at creating drafts, filling out the materials, thinking through steps. The scarce resource will really become the innovative idea. So the people who can have the innovative idea, those will be the ones I think in the highest demand in the future.
And I think the other thing to differentiate is traditional AI is very different than generative AI with a large language model. So a much higher bar from a controls perspective and a risk framework on the generative AI side right now. So traditional AI, that is much more broadly used across domains because there are so many different ways to leverage that pose less risk, but it can also bring the value of efficiency opportunity.
Okay, so note to self, I can encourage my son to be a lawyer, but only in the short to medium term before that job becomes taken over by AI. We know that AI is expensive. You have to pay for the software, for the tools, you got to hire talent. We're talking about data scientists, engineers, software developers to then develop the applications. I'm curious to hear from you what the spending trajectory looks like at your firm. Is it something that resembles NVIDIA's stock chart over the past 2 years where it's like this and then it shoots up? Or is it more like the Federal Reserve's interest rate increases, kind of incremental, and then plateauing for a while?
Yeah. So I think to answer that, first of all, the question around investment in AI is already a difficult term to quantify. And the reason is in JP Morgan's case, we've publicly disclosed we've invested $2+ billion on data center modernization, which means uplifting the data centers, moving into the cloud, that infrastructure, et cetera. And AI is a direct beneficiary of that. So does that get included in AI spend or not? Another lens to take on it is just the data science and AI talent that is building the models. I think though in your two options, I think it's much more like the Federal Reserve. We have been steadily increasing our investment in these areas, but it hasn't seen NVIDIA type spike, and I think we'll continue to increase at a steady pace over time. The only other point that I would add is the areas where we're investing, we are seeing a slight change in composition. So in the past, in the past years, there was a lot of focus on getting the model developer, the AI practitioner, the people building the models, and that's going to continue. But increasingly now, because of the availability of very powerful third-party Gen AI models like ChatGPT and Anthropic, et cetera, there's now a different type of skill set to talk about bringing those on board, using those and connecting those to systems. That's a little more of a engineering dominant area. So we see the composition changing a little bit.
Yeah, I would agree as well. I think it's kind of a more like the Federal Reserve example you made with the interest rates. But I think one thing to keep in mind, again, differentiating the cost of implementing large language model solution, often depending on the type of data you're using, if you're using it for something broad like fraud or in banking, anti-money laundering, some of those fairly common use cases, there's so much data involved there. The costs for hosting and the compute cost, if you will, to use those models with all of that data can be very significant. So one thing we're really looking at too is making sure we've got a really good, consistent, solid approach on your business use case and make sure we've still got the ROI opportunity even with significant costs up front.
Is it difficult to convince your CEO to spend on AI, or is this something where they're kind of throwing money at you?
Jamie Dimon has not needed convincing that AI is the future. He's been on record a number of times. In fact, it was, I think, really attributed to him back in 2019 that we were one of the very first movers and big spenders in the AI domain.
Yeah, I think our approach has been a little bit more deliberate. I think where we've got a very clear, solid business use case opportunity and we demonstrate that we've managed the risk, and then we move forward on those in terms of our portfolio.
You mentioned something that piqued my interest, which is about fraud and bad actors and what can go wrong. And again, we go back to that fear versus hype scenario where there's a lot of concern out there. Let's talk a little bit about the fear factor here. What's a nightmare scenario that keeps you up at night that is something you need to think about? It may not be around the corner, but it's kind of something out there lurking.
I think one of the scenarios there is, especially with large language models now, the ability to create something like a deep fake or something that will convince an employee or customers that this is our firm reaching out to them. This is PNC. So that the technology that's enabled now to do some of these deep fake videos and things like that, and other ways to, I'd say, even enhance, accelerate some of the potential of the typical fraudster scenarios and scams. That's something that we've got a lot of focus on. How do we make sure we're educating people? How do we make sure we're taking additional precautions to protect everything we're doing, as well as using it, to advance our own use cases?
So it's almost more sophisticated versions of what people have kind of already been exposed to.
There's definitely some new opportunities as well, but definitely it can really enhance the quality, for example, of a deep fake video to really, I think all of us have seen them in different formats, could convince you it is, a senior executive or even just, a call center agent or somebody legitimate that's requesting information from customers.
Yeah, it significantly lowers the bar and lowers the cost for adversarial actors to come and do the things they've always been doing. And deepfakes is one example, but cyber attacks are another. And given that AI is now very good at generating code, that allows the automation of malicious code to be able to try and poke and prod at levels never seen before on a security perimeter. Or if you think of biometric voice, using voice to identify, at very, very low cost now, fake voices can be created to try and fool those types of systems. I think that banks need to be very, very aware of how on every single front the malicious activity can be turbocharged with this and uplift their own controls, of which one big element of that is going to be more sophisticated AI as well.
Right. So, Deb, I know you've talked about the need for a nutritional label, like something that kind of allows you to itemize exactly what's going on, be very transparent. Can you talk a little bit about the use case for that and how you see it being implemented?
Yeah, this is something we've talked about internally and also with some of the external groups we partner with, is something analogous to a nutrition data label that if you were using, whether it's in-house, so we'd be sharing it with employees, potentially customers, or if it were using a vendor, third-party partner, getting some basic information around what data is used to train this model. When was, what's that time period? When was it last trained? And just some basic, consistent information that would help inform and understand, what the output of the model is. Because oftentimes, that can be a little bit of a black box.
Who's asking for these nutritional data labels? I mean, I know it's, for use internally, but are any external players actively seeking this out?
I don't know. We don't have any of those use cases in production yet, but it is something we're proactively looking to do to provide that information and definitely have that sort of disclaimer as well as basic information provided when we do have large language models in production.
And the thing, of course, Derek, with AI and banking and financial services is your industry is highly, highly regulated. So that speaks to the idea that those of you in banking need to move very deliberately and move very cautiously and kind of make sure you're safeguarding all kinds of things. If you could grade regulators on where they stand on AI, what grade would you give them, the U.S. regulators? Are they ahead of the curve, behind the curve? Are they averaging, C+?
It's interesting. I think it's a mixture of both. On the one hand, on a very positive note, because banks have been using models in very important decision-making, like credit decisioning, for years and years and years, there are very mature regulatory frameworks put around that. Model risk management, independent review, fair lending requirements. And the nice thing is that even when you move into an AI or a Gen AI world, a lot of those carry over and address many of the risks that are of concern. So when we ask around what's the risk about bias in Gen AI, there's a whole litany of regulations which have just addressed those in the past which carry over. So in that sense, when we sit down with CEOs of tech companies, they actually say that the regulated banking system has amongst the most mature of regulatory environments in around AI. That said, the flip side is that while a lot of these concepts poured over, they don't exactly pour it over. And so generative AI begins to challenge some of the concepts a little bit, and thus there needs to be a bit of adaptation and fine-tuning. A great example is that model risk management was mostly envisioned around a framework where a bank builds its own model and then there's a second pair of eyes. Now we get into something like a foundation model like ChatGPT, where it is really a black box. We have no idea. And so how do we think about that in that concept? So there is some uplifting to do, and regulators are very, very aware of that. I applaud them for, I think, being very proactive on getting themselves educated. But I think the rules still need to be written as to where the target state lands.
And I have an audience question here I want to bring up and incorporate into our conversation. You both can see it. In which areas of the bank have you had the best results in implementing AI, and what type of applications would these be? Who wants to answer this first?
I mean, I would say from our perspective, again, this would be more traditional AI. So conversational AI or document AI, where you're extracting data to simplify. In terms of best results, probably in some of the call center environments where you have a large number of agents, for example. And so any value you can bring in an area where you have many agents or, a large operational area like that, those are probably areas where we've seen the best results so far to date.
Yeah, I would agree that the most value from AI in bank has been and is coming and will continue to come, at least in the near term, from non-generative AI, basically predictive AI or machine learning. And specifically, it's in the domains of fraud, credit, marketing, and pricing, and a little bit of operations. And I think that you would find that to be quite consistent across the large majority, if not every bank. As we look forward to generative AI, the most value over the near term, I think, will come in and around knowledge management. So taking every employee that needs to be able to gain access to information quickly, be it in a call center, financial advisory, a sales function, an operations function, and using a sort of co-pilot framework to very, very rapidly get a very precise and curated and accurate answer quickly, and that will boost general productivity levels.
You guys work at different size banks. PNC has about $566 billion in assets. That is 1/7 the size of JP Morgan Chase. When it comes to implementing AI, when is size a benefit versus a hindrance, do you think? Derek?
So it's a bit of both. On the one hand, the size of JP Morgan has allowed us to invest more. And I think that the past decade has showed that size has been a strategic advantage for a myriad of reasons. And indeed, we've seen market share consolidation across the largest banks. So that's helpful. At the same time, the largest banks bear the highest bar for regulatory standards. And so that in itself has a cost in terms of the number of control requirements, time spent with regulators, et cetera.
Yeah. I'd say from our approach, we've been able to be somewhat targeted in where we apply AI and continue to have regular updates with our senior executive leaders, with our board, with our regulators, but literally looking at where do we leverage that will bring the most value to our business lines and prioritize in that way.
I want to also end with talent, because that's a big question for a lot of people, certainly as we talk through the nightmare scenarios of jobs being replaced. There's a popular phrase that keeps coming up whenever we talk about implementing AI, human in the loop. And Deb, you had explained to me that basically means you need a fact checker, a person, to make sure that the machine is spitting out the right stuff. So yay, we have a purpose. How has the commitment to AI in the financial services industry change the way that banks think about hiring? Will banks still need, I don't know, entire classes of junior bankers, summer interns, the way they used to? Because a lot of the grunt work that they were doing, the mundane stuff, can be shuffled off to AI.
I don't think in the short term we are going to see any reduction in the need for our summer interns, our new college hires, for any of the programs that we have. I think it actually can be viewed as a positive. I think they may be able to, earlier on in their career or their internship, whatever it is, be doing more value-add work, because we can do more automation with some of that more mundane routine work. So I don't see that in the short term.
I agree with that. I think that even in our world, you could say you could press a button and instantly get a wonderful investment banking pitch book. Then all that does is it just ups the baseline of the competitive norm. The best of the most competitive players will still always find a way to add some sort of special sauce, some sort of differentiating. Maybe they'll make some sort of marketing video. Maybe they'll do something spectacular, creative in different ways, and that's how you're going to win. You're going to win business. In addition, there are going to be new aspects of jobs which need to be created. In a world where AI can create automated investment banking pitch books, there has to be a whole new job function stood up around the knowledge management of that. How do you curate, sanitize all of these documents, think about the proper entitlements, et cetera, connect models into that? That's a lot of work that nobody's doing today, so that's going to create needs. So I don't see a world where the talent intake is necessarily going to change.
Are those jobs that you need a computer science and STEM degree in, or is that something that humanities students, those who go to liberal arts colleges, can gain the skill set to do and find a career path on Wall Street for?
In today's world, I would happily take a top all-rounder athlete over a specialist in a technical discipline.
Deb?
Yeah. I would agree. I think coming from a technology, security background and area of the bank, realistically, we do recruit more in the STEM areas, computer science, engineering. But I have also seen people be incredibly successful as they transition, from other areas. At some point, it's also just, what your mindset is, what you want to learn, how you advance, kind of moves past your educational background.
All right. Thank you both so much. Deb Lindway and Derek Waldron. Really appreciate it.
All right. Thank you.
Thank you.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access to the details you want, optimized for higher level analysis, and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data to learn more.
Please welcome to the stage Bloomberg's Wayne Barlow.
Hello, everyone. Thank you for joining me at Bloomberg Invest today. Not a day goes by when there's not a new promise that AI, Gen AI in particular, is going to deliver to transform business operations or the investment process. But this is not without challenges. So today, what I want to cover is I want to talk a little bit about the opportunity that we have with generative AI, face some of those challenges head on, and then give some practical examples and advice that you can take away as a decision maker and how to think about applying this revolutionary technology. So first, let's set the stage where we are. So we're going to start with just data. Over the last 10, 15, 20 years, there has been an explosion of the amount of data that's been coming into the financial markets. That data is exchange data and just market data, number of orders, the amount of volume, the amount of reference data, fundamental data, alternative data. There's been this grab for data, and a lot of that has been generated through more traditional means, just good old technology and technology automation. Some of that has been through more traditional machine learning and AI and how much we can process information. And in this, we see this introduction of generative AI and generative AI systems. So this reminded me as I was putting this together, I don't know how many of you have ever read the XKCD cartoon, but there's a cartoon that they put together where there's this person sitting at a computer and says, I'm just about to finish my analysis of this data, and their colleague comes running and saying, no, stop. You're just going to generate more data. And that's what we're going to see when we start taking and applying generative AI to these same systems that we're already seeing this ever-increasing growth in data. But generative AI has a huge promise, right? Everyone is super excited about what is this going to do for my organization? What is this going to do for my business operations, whether it's back, middle, front office? How is this going to improve my customer service with my customers? How is this going to improve my developer or engineering productivity? What is this technology going to do? There's a lot of excitement. How is this going to simplify the investment process? Are there ways that we can apply these technologies and get more value out? Now, why is this technology so amazing, right? Before, as I mentioned, there was lots of data. Well, one of the reasons people were hungry for data is because traditional AI models needed lots and lots of data to train them. And so it was a competition for more and more data so that we can train bespoke small models to serve those processes. With new modern large language models, they're general purpose. A single model can solve many, many different problems. They have a broad knowledge, taking in almost all of the internet and all of the things in human history and artifacts that we can bring together into these models. And it's also made them accessible, right? Who would have thought we would have been talking about prompt engineering as a discipline 2, 3, 4 years ago? So it's become a game changer, and it's become something that we should be very, very excited about. But there are some hurdles that we need to overcome. It's very simple for us to create a very cool demo. We can take a system using out-of-the-box models and generate a very cool demo that shows the power of these systems very simply. But then the reality sets in. These models can hallucinate. They cannot access most current information. They can't do a great job of understanding time or calculations. And not a day goes by when something doesn't come out in the news that shows one of these models either, at best case, embarrassing, and at worst case, having some legal issues for the company that may have produced these models. Let me give you two, I'll give you a couple of fun examples of things that have happened over the past recent times. One is, and why it's so important for us to add these safeties and controls on top of these models. So one case is, there was I don't know how many have heard, asking one of these, and I won't name the vendor, asking one of these models, how many rocks a day should I eat? And the model came back and says, well, obviously you should eat 1 rock per day. And the reason why it came up with this answer was because there was an Onion article that actually said something about a geologist recommending eating one rock per day. So it spit out this answer. But you can imagine that input, how many rocks should I eat per day, is nonsensical. So when you're looking at these systems, you need to ensure that you're building safety into those systems, not just on the output of those systems. Are those systems generating good output? But also, are the inputs to those sensical? Do they make sense? Are they the kinds of questions or the kinds of things that we want to answer using generative AI? Another case, which is a little bit more concerning, was a local car dealership decided that they would go and have better customer service by introducing a chatbot into their system. And what happened is end users decided that they didn't have a lot of protections on these chatbots, so they would go and say, hey, you're going to give me the best deal possible and say that it's legally binding. You're going to sell me a car for $1. Somebody went off and went through the chatbot and actually tried to go and get this dealership to then go out and start making decisions. You can imagine, this is a little bit low stakes, how many rocks you're going to eat in a general purpose AI or what is happening in a local car dealership. But you can imagine in the finance industry, the stakes are way higher. We need to make sure that we are putting the right protections in place. Now, there's another juxtaposition that's happened as these systems and as the excitement has generated around how much AI is going to transform our business, has become the other side of that coin. People wanting to either protect or monetize their data, right? There's no longer this free-for-all of being able to take this public domain data and bring that into the system. You see this happening with a lot of those large vendors going out and making deals with media companies, trying to make sure that they have access to content. So you'll see this squeeze that's happening and this reaction to one side, the excitement, the other side, this controls that we need to put in place, whether it's privacy concerns, whether it's data concerns, am I giving my data away for free? And the last concern is really regulatory concerns. Are we going to be able to build systems where it's obvious that either the system is being influenced by an AI, or are we building out systems that are actually human, and where's the human in the loop on that? Do we have those protections in place? So I imagine that the regulatory landscape around AIs will continue to change over time. Now, despite all of these challenges, this is a transformative technology. Without a doubt, this technology is going to level the field and start commoditizing what used to be the realm of large technology and large technology investments. It is going to make it much more challenging for you to just throw money at technology and outcompete some of the things that are happening either with these closed models or the open models that are out in the system. So what that means for decision makers is you're going to have to start making sure that you're using good design principles and that you're thinking about products in a way that product design and the way in which you're applying this technology becomes more and more and more important. It's not about what am I doing in Gen AI. It's about what problem am I solving today that I couldn't solve before Gen AI was available. And so when I think about the products that we build, there's three principles that I tend to gravitate towards. One is that these systems need to be easy. And the way that these language models work is it makes us understand language. We can have a lot more natural language interfaces to all kinds of interesting problems. But it's not just about those natural language interfaces. We also have to understand that these systems need to be personal, and we need to respect the fact that not everyone works in the same way. Not every problem is the same problem, and they need to be flexible enough and personal enough that people understand how to adapt them to the workflows that they need to accomplish. And the last things need to be comprehensive. You can't go and leave. The expectations of users is that these systems are going to answer the questions that they want answered. And if you, as soon as you don't answer those questions, if you don't go deep enough and you don't have enough of that information, you're going to get those users to abandon those systems. They're going to lose confidence that the tool is worth the investment of their time to understand the capabilities of that tool. So what I want to do is give you a couple of real-world business cases on how we are practically applying this technology at Bloomberg. So one thing is summarization. It's relatively obvious, right? Everyone, the one thing that everyone can agree on is Gen AI seems to do a pretty good job of summarization. But if you take financial documents as is and throw them at a vendor system and just say, hey, summarize this document, what you're going to get is a general summary. That summary, one, may contain hallucinations. It may not contain references back to the source material. It may not answer the questions that are important to a financial professional. I think there was something that on the stage before they talked about domain and subject matter expertise being very important to these systems, because the way you want to build out a system is by applying expertise to specific problems. So in this particular case, if you take a look at a research analyst, what you want to do is say, well, what is a research analyst doing? What is the opportunity? What is the problem we're trying to solve? Well, one, research analysts have to read lots and lots of documents every financial quarter. They have to go and synthesize information out of these documents every quarter, and saving any amount of time in that process will be beneficial to that end user. But it has to be, again, comprehensive. So what is that list of questions? When somebody looks at a financial document, what are the questions that they're looking at? And so making sure that you understand those questions, making sure that you have good evaluation data that you can apply to that system so that you can get the best answers, making sure that you go back and have transparency. Where and what reference did this summary come from? Where did it come from in the document? Because the worst thing that can happen is you actually add time to that investment process. Somebody reads the summary, they don't trust the summary, so then they just read the document. Right? So what you want is that summary to be helpful. Either it's helpful standalone, or it allows them to jump to the places that are interesting, relevant to their expertise that they can apply to that investment process. So this is one case where we're looking at single document and single document summarization. But the other thing that you need to do is take a look at how do you want to do that over a collection of documents. And this is where you have to apply some different techniques, where you're looking at not just applying a large language model to a single document, but across many documents that you have to understand, well, what is the document set that's relevant to the question being asked? And for that, you need to use something like a dense vector semantic search system, where you can pull in those relevant documents, and you want to be able to then, from those documents, generate a summary. But similar to the case with a single document, there needs to be transparency. For someone in the professional world, making investment decisions on top of this information, they need to trust that the information that you're giving them is the right information. So calling back out to individual documents that give you that information. In fact, the individual paragraphs in those documents that are participating in that summary is incredibly important. So those are just two simple use cases. I understand that I see that I'm running a little bit out of time, so let me go ahead and I'm going to go ahead and end my talk. You can see, for those of you who are not subscribers to the Bloomberg Professional Service, you can scan the QR code and go ahead and learn more about Bloomberg. With that, thank you, and thank you for joining me at the Bloomberg Invest.
Thank you so much, Dwayne. Thank you to our tech and AI leaders for their insights this morning. And thank you to all of you for being such a thoughtful audience, for being an attentive audience, and for the questions that you did send to us. I want to again thank our sponsor as well, Invesco QQQ, for helping make this innovation stage possible. Now, Bloomberg Invest continues upstairs. We have more great conversations lined up. Please make your way upstairs and grab a front row seat for a conversation with Josh Harris and Bloomberg's Jason Kelly. Have a great rest of your day.
Tell me, how did we get so far? And how did it get so dark? Tell me, how did we get so far? And how did it get so dark? Tell me, how did we get so far? And how did it get so dark? Tell me, how did we get so far? And how did it get so dark? Tell me, how did we get so far? And how did it get so dark? Tell me, how did we get so far? And how did it get so